Joining us in Nairobi is Eric Musau, research analyst at Standard Investment Bank. Eric, can these highs for the shilling be sustained, do you think?
It seems so. I mean, with the current high interest regime, we are seeing the currency strength likely to be maintained. But I think once we start to see an easing of interest rates, we could see it coming off a little bit. I think it'd probably be good even for the economy. But more or less at this time, we're seeing very good supply in terms of also FDI and so forth. So we're just watching to see how that will go.
What do the results of that 10-year bond from yesterday, and indeed the 182-day T-bill, say about the market in your view?
I think the central bank is very keen to actually push interest rates down. We saw them rejecting most of the offers on the 10-year bond, so they accepted just about 10% of what the market had given the central bank. They did accept most of the offers on the short tenure, so the 6 months. And so it tells you that the central bank is keen probably to take up higher interest rates on a shorter basis, but on the longer basis, they're actually rejecting most of the offers.
So far, at least the mopping up of excess liquidity and everything else have tried to show up the shilling appears to be working, isn't it?
Yeah, I'm not sure whether they're actually trying to show up the shilling or whether it's inflationary pressure they're sort of looking at fighting. I think it's more of inflation risks that they're looking at. But I think in the next couple of months, once we start seeing data and they start attaining the target of inflation that they're looking at, we'll start seeing interest rates easing, and so that will reduce activity of the central bank in the market.
Let's move on to the securities exchange. The NSE 20 share index breaking off its recent losing streak and picking up almost a percentage point yesterday. What did you see driving activity?
East African Breweries was quite active. It did almost 60% of volumes, and that was mainly done through mainly foreign investors. Kenyan Kobil got relisted back into the market. The suspension got listed, and that again we also saw coming up, and investors were also quite keenly watching the counter.
And Kenyan Kobil is an interesting one because fine, it's back from a 6-week suspension, but at the same time, despite the rally, it has a profit warning out and says its full year profits could be materially lower, at least 25% or more lower than the last year.
Yeah, certainly. We're actually not surprised by that. If you look at the full year earnings for last year, they did have an unrealized loss of 1.5 billion, and management did allude to that fact. And again, if you add to the fact that Puma Energy is actually looking to make an offer for the entire company, we think once the ongoing due diligence is done, the offer that they're going to make to the minority shareholders is going to be significantly above the current share price. So I think, I think that's, despite the profit warning, we're still seeing buying interest in the company. And we also need to understand, I mean, the issue of seasonality and lumpiness in terms of earnings for Kenyan is not new. Last year, the first half, they did very well. The second half, they struggled quite a lot. And it's not surprising that for this year they can have the first half struggling, and then the second half having a full recovery and even posting an increase over the previous year. So I think the market is taking the profit warning on its stride.
But speaking about profit warnings, it seems the Capital Markets Authority is very serious about this, saying it will fine Centum Investment for not issuing a profit warning when its profits tumbled more than 40%, at least the untaxed profit line. This is unusual, but we've never seen this before. So who pays for this? Is it the shareholders or the directors?
No, it certainly comes from the company, so essentially yes, the shareholders. But essentially, I think the regulator would probably be looking at sending a signal to ensure that compliance is actually achieved. Centum did send a clarification on their profits where they did say normalize the earnings were actually more or less flat. So I'm not sure whether that would be enough to sort of have them get away with
get off the hook.
Fine.
But on the academic level here, they did see this coming. So ideally, they should have given everybody an earnings alert. Hey, everybody, our profits might be below 25%, just to let you know.
Yeah, I mean, I think that's what the market thought, and so the market generally was caught unawares, and I think that's what raised the concern even on the part of the regulator.
Still some interesting developments. Standard Chartered signing and financing agreement with the refinery. The refinery in Kenya finally becoming a merchant refinery. How significant is this, considering how long this has been in the pipeline?
This is a very important development. The oil marketers in Kenya have been complaining about the current arrangement where the refineries actually acts as a toll station. So it's given fuel, the crude, and then it processes and then gives the oil marketers. So the oil marketers have been complaining about yield shift losses. So under the new system, the refinery will be able to buy its own fuel, make sure it is efficient with regards to its processing, and then be able to sell it to the market, hopefully at a competitive price.
How do you think the market is likely to do today with everything that's happening?
Maybe just to add a little bit on the refinery.
Yes.
If you look at the current arrangement, if the refinery has actually been inefficient, and we were actually surprised that they look very enthusiastic to go ahead with the current, with the changeover. We didn't see any incentives granted to the refinery in the last budget. So we're a little bit surprised to see, but you know they've also said their upgrade plan is they actually bring it back by about 1 year, especially with the discovery of oil in Kenya. So we think on overall for the oil sector is going to be positive for the sector. With regards to what's happening in the market today, I think we are more or less likely to see moderate trading. Yesterday, local institutions were not very active in the market. So if local institutions can come back in the market today and probably provide more supply or more demand, and then we might see probably the market heading higher or even volumes also increasing.
Right, just in a few seconds that we've got left, Safaricom has seen a slight rally, and today news that a court has stopped the Kenya Revenue Authority from demanding £500 million shillings in unpaid tax arrears. What do you think about Safaricom?
I mean, Safaricom has had a good rally, but most of it has been more to do with the setting of the mobile termination rate, which came in a little bit higher than what maybe even Safaricom or the rest of the industry was expecting, which Safaricom was preferring. So that we think is really the main driver.
Right.
I'm not sure about the case and what impact that could have, but it's not a very significant portion.